Hi traders, good afternoon. It's Friday. Good afternoon from London. Good morning, good evening, wherever you are in the world. Good night. You're just starting your weekend. Hope you're all well. It's Friday. We are the 8th of the 8th, 25, the 8th of August, 2025. And we're just waiting for the main news of the day. It's been economic data releases wise. It's been a relatively quiet week. But it's been an absolute uproarious week when it comes to the President Trump, the earnings season. It's been a really, really high, intense news week, both politically and I say economically as well. It's rolled over quite significantly. If you're an investor in Eli Lilly, if you're an investor in Tesla, if you're an investor in Apple, or a very, very interesting week. Intel as well. Lots and lots of news flying around. If you're long sterling, that's good as well. Yesterday we had our fifth consecutive rate cut since the new Labour government's come into power in last July in the UK. Sterling rallied again through 134 yesterday as we were watching it, and we've held that ever since. So the break of 134 is key. That's a big support area. Now you can see here it's going to be the 50-hour moving average here for sterling. This is the cable dollar, pound against the dollar chart. You can see that. Let me make myself a wee bit smaller. You don't want to see my big bald head, do you? There we are. You can see a bigger chart there. So that's sterling continuing to rally, well supported by its 50-hour moving average, well supported by its 20-hour moving average since yesterday. Before yesterday's breakout here on earlier in the week on the 6th. On Wednesday, and then another big candle there on later on Wednesday into the US close at the US close. At the UK close, the 4 o'clock candle, 1600 candle there. So big positive candle on the data release, and then you can see here again. See how we always talk about the bodies of the candles, don't we? And you can see here 1, 2, 3, 4 big positive body candles. That's adding to the bid. Looked like it was rolling over there. It didn't happen. Looked like it was rolling over there. Moved down into the 20-hour moving average. But I mean, this is overnight. This is the Asian session. This is 6 o'clock this morning. The 20 hours held. We looped a bit lower again because that high here is lower than the previous high from last night. And we are now testing again the 20-hour moving average. So this is looking to perhaps go short into the US Open, into the data. But anyway, that's on that particular time frame, on that particular pattern setup or candle setup or system setup, this trend following system. But again, still bid on the higher time frames. So the hourly cable rate looking like it may be rolling over, but we've still got 40 minutes before that hourly candle is completed. So can't make any decisions on that one currently. If we go down a time frame, it's not. You can see the 15-minute may have already over. There we are. 15-minute has already rolled over, but you can see how flat the moving averages are there. So it's really not really want to move much lower. We're into our lows of this session pivot area. So your next downside target might be this 134.05. You can see that from earlier, but we're at 134.27 at the moment. So if that does move down there, it will have broken this range here from yesterday. So it will create a new day low. So watch that as well. It's testing that low. We may see some dollar buying and stable cable weaknesses. Obviously, this is as the US traders are waking up and getting into full swing for Friday. Anyway, say sterling very well bid on the rate cut from the Bank of England. We talked about that yesterday. A big surprise. We had a 4-5. In fact, we had to have 2 rounds of votes because the first round was 4-4. 4-4, no change. 4 for a 25 basis point cut, and then one member of the MPC, a guy called Alan Taylor, wanted a 50 basis point cut. So a big half a percentage point cut. They reconsidered, as the governor said in his press conference. He could have, had a casting vote. He'd already voted for the 25 point cut, but they had a second round. Taylor assessed and went for 25 from 50, so that there was a cut actually went through, because otherwise rates would have stayed as they are, and that would have really spooked markets. But anyway, so we have got 4% interest rates, base rates now in the UK, and sterling is holding 134 as a story. It's other major competitor. We look at against the euro, and that's a major competitor, the euro pound. This is all on the follow up from yesterday. You can see big decline here. The euro had been as high as 87.45. These are this was a 2024 high. So euro pound had been relatively high over 87. Came crashing back through 87. Got as low as 86.50 this morning in the early trades this morning. It's recovered a tad, and it's now edging back over 86.70 as we speak, basically, but still under 87. 87 is all the way around about here. There, but anyway, that's sterling. Anyway, that's the story of sterling. So the main news, as I said today, is the Canadian data. We just put the calendar up. The Canadian, that's from yesterday. Obviously, I'll come back to what Trump had to say yesterday. Lots of obviously the tariff situation is in play now, and the real next lot of data will be really related to the tariff impact on US earnings, US businesses, and US consumers, how they're feeling. Late last night as well, weak data from Japan last night or overnight. Say the main data today, the Canadian jobs numbers coming up in 4 minutes time. 81,000, big surprise for July. Cooler certainly for the August number, and unemployment likely possibly to tick up again. Remember the 35% tariffs that Trump has imposed on Canada are in play, but also on top of that, Canada, America, and Mexico have this North America trade deal, and so there's lots of goods in particular that are not covered by the 35% tariffs. But obviously, the big clampdown has been on steel and cars crossing the border, and cars. The way they manufacture the cars in the North American continent, should we say? It crosses the border quite a few times. The assembly of the vehicle, and so all of that is very difficult to administer the tariff on. But politically, it's a big stick that Trump is wielding about. And he had another big stick yesterday regarding the Fed. We'll come on to that in a minute when the data's out of Canada and talk about that a bit more as well. But guys, as ever, if there's anything you want to have a look at, or any particular asset or any particular market, let me know and we'll look at it in detail. If not, I'll just run through the majors, the ones I'm trading, the open positions we've got, whether we're in the money, out the money, and how we're doing. Then we'll wrap up for the week, and I'll look at next week. Next week, we got the key US inflation data. Very much eyes on that. Very quiet on Monday, but anyway, let's get through, see what's happening today. So if we just open the dollar CAD, or the CAD crosses, let's just open the CAD crosses here. And this is the one we were long, pound CAD, we were long here. This is our stop loss. Might pull that up a bit here. This is actually it's 15-minute time frame, so that's probably a bit aggressive, given that we got impending CAD data. But the hourly is right up there, so we're halfway between the 50 and the hourly. We got 20. That's our 80, but we got in here on the 5th. 80% of our risk was taken off at target 1, and then obviously the follow through from the Bank of England took us all the way up here to 184.80. We've come down from that, so I've dragged my stop loss up for the second 20%, up to here at 184.26.5. So we've very much in the money on that particular trade. But let's have a look at the major, which is obviously against the dollar, and the trend lower from last week, following the big surprise for non-farm payroll, is still in place. So dollar continuing to weaken here on the hourly chart. I had a bit of tick up here on Monday, but we've been down ever since, back over the 50-hour for an hour or two yesterday, and then down again today, ticking higher but weaker again. See how the highs are getting lower this week. There was that rally. We got to 138.80 pre non-farm payroll, and the lows continue to get lower. The highs, continue to get lower. We've broken this 137.75 area through here, which was a previous congestion area, holding zone, and lower retrace, lower, weaker retrace, lower, potentially stronger retrace, given that presumably that's the data breaking higher. So dollar coming out. So it looks like maybe weak data out of Canada today. So let's have a quick rescan of this. It'll have to scoot through the whole thing again from Monday all the way through. So yeah, big surprise, big negative surprise. Weak data for our Canadian friends here. So a decline, a reduction of change. So jobs lost, 40,000 jobs lost for the July number for the Canada, 40,000, nearly 41,000. Was expected to reduce from the big uptick we had last month, but 15,000 to a negative 41,000. That's over a 55,000 off, around about 55,000 variance on what was expected. Not good numbers here from the Canadians. Hence the weakness we've just seen in the loonie. 51,000 decline in full employment and only a 10,000 gain in part-time employment. I like the way the Canadians do this. The US don't actually show you explicitly, clearly, the part-time employment change, but that again, very weak. At least it's remained positive, and the participation rate has slipped as well. But unemployment has also slipped. So there's one sliver of good news. We're still at, it's still a relatively high rate for the developed economy, 7% for Canada, which was one tick below that at 6.9%. But that will take loonie traders by surprise. A decline of nearly 41,000 for job creation in the new month. It could be obviously impacted by the strange weather we've had in North America as well. Extremes weather we've had in the early summer, but that was for this last month in Canada. So a weaker Canadian dollar, one would expect. Again, if we just bring this down to the 5-minute chart, if you wanted to actually trade this news, and as you can see, say this all the time, don't I? 5-minute candles or in 2-minute candles, so that's the one where you're restricted with your standard account. We've been range bound here. We've been slipping around. We've been short here, gone long there. It didn't work out. Short. Next big break was this huge one here. I don't know why that happened there at 12.52. It just did. Don't read too much into it. But look where it went to. That's the other key thing you'd have seen at 12.52. It went to a previous high. It went to the high of at the middle of the morning, the 10 o'clock zone in Europe. And we stalled for a minute or two, and then we went through it. Then where we kept going, and we've pushed to the high of the day. So this is the beginning of the day, if you like, here. The high of the day was earlier on in the European session here. Just put this through here. Just see the way you should be trading there, and you see that there's 3 highs there. I don't know actually what the number is. It doesn't really matter. 137.50. So there we are. It is a round number. So tested there at 2:30. Tested again at 6:30. Tested again at 7 o'clock. That was the area you would have been looking for. So on the European Open, just before an hour before, we've been lower. We put in the lower the day here at 11:30. 11 o'clock my time. So 11 o'clock. So that's the low of the day. That's an extreme, wasn't it? Because you can see the other tested low is a bit higher than that, 137.27 rather than 137.26. I mean, it's only a pip, but you can see the difference there. So that would have got you certainly. If you've automated this system, that would have taken you long, and you would have had a bigger risk on because of the size of the candle. The breach of this zone area would have added here and then the breach of this level, which is a previous fib or something, it's significant. So my trading system would have seen that, so it would have added here on that number. Obviously, that's the data coming out and moving up. We don't know at that point. So again, even if we were using our standard system here, that's when we can't take a position. But I'd have still been long. I would have probably have closed my long out here. If this had been long this morning, and I knew this was the main data of the day affecting the Canadian dollar, I would have added, as I've said there, and then closed out here and waited for the reaction to the data. So what would I do now, guys? I'll be buying this still. At the end of this, when the time was up, I'd have bought here at the conclusion of the 2 minutes there. I would have got in around about here, 137.56. So I've already made some nice pips today on this big move up. I would have lost, now again, we also trade in every system, but again, you'd see, are we in a trend with the higher trends? Well, we were down, weren't we? The 2 minute time frame, if we look at the hourly time frame, we were in trend. We were down, and this is turning around. So this 2 minute rally, or this rally on the news, is turning the high against the higher time frame trend. So where could it stall? Well, it'll probably stall, if not there, where we are now, literally where we are now, 137.62, or a little bit higher at 137.66. So anything around 137.60. We're at 64 now, maybe stretching it a bit far. So, on these short-term time frames, we go back to the 2 minute. You see the hourly resistance there? Let's put that in at a different color. And this is how you trade, guys. This is how you trade technically, whether you're doing it manually, whether you automate it, you code all this thing in with the rules. We go long when the 5 and the 9 have crossed, and the completed bodied candle closes above the 21 EMA, go short when it's crossed the other way, blah, blah, blah. Stop loss around the turn. So again, if we were trading this on the hourly time frame, or this time frame, which is the hourly, we can't do that yet because that hour isn't complete, but this would also be looking to go long, because it's also gone over the 50, the green line, which isn't actually part of the this particular setup. But anyway, back to the 2 minute time frame, and there we are. Long, we've got long here. We've instantly it's gone against us. So what did I just say? Because we were at that, we would have already had that set. That we might have had a target set. Let's go up. Sorry, we should show it on the 15 minute. There we are. So you can see there's that 138 cluster, but you can see this was the immediate resistance from. Actually, it wasn't, was it? What we're talking about? 60, 66, and 67 is what I was saying. So I'd say anything above 60, you may be pushing it. But on the 5 minute, we should still see it. Remember, that was our 2 minute. Yeah, so you'd have been, there we are. You would have been looking for that one. So 137.66, say 65, because it's all 64. Now get to so that's might still the upside target on this move, unless this fade, which is happening now in this first or second 5 minute candle after the data, because the where we are 38, so it's only just happened. So that would be the upside target, unless this fade continues to eat away at the big move. But then what you would want to see is how much of the the move is getting resisted. So you might put a little, even at these levels, guys. This is it's not what Fibonacci was designed for initially, but it helps you potentially. So there we are. Look at that. You see what I'm saying? You can see where we are now. We're back down to 61, the 61 fib level of the immediate move, even down at these 5 minute time frames. So if this level holds, and the 50, I would argue, this could still be a potential long position on this 5 minute time frame. Well, as we said before, didn't we? We were, sorry, just leave that literally where it is, because it's from wick to wick, this one. So that's our 5 minute Fibonacci on the news. So if you want to trade the news, even if you've got a standing account waiting for the 2 minute window, 2 minutes before, 2 minutes after the 4 minute window around the actual news, don't be panicked about it. Because again, this is clear, much more clear, isn't it? The 5 minute candle, you would have got in here at 12.50 as it was now, stop loss would have been down here, and you would have sensibly, closed out before the data come out and then respond what to do. So at the moment, for 5-minute traders, remember guys, we another minute and then this second 5-minute candle will be completed. Even if we bought after 5 minutes here, obviously we're out the money at the moment, but this is looking okay so far. But again, it might be just tested, so I'd like to see perhaps a test into this area. But you don't need to. If you've added on the first 5 minute, just wait and see what the reaction looks like. We go back to our 2-minute time frame. There we are. So we've had our down candle and now we've ticked back up. See what I'm saying? So although we'd have got in here, we're still been in the money. There's the still. There you can see the fib spread of the actual news move. So we've had a spike up, positive finish of the candle, but we've given back into the key fib level on this time frame. And again, you could even do it down at the 1-minute time frame. I know a lot of you. I've seen a lot of your trading positions where you're using the 1-minute time frame. But again, you see what's happened there, even on the 1-minute time frame. So again, on the 1-minute time frame, there's that break we were talking about earlier. There's that top. We'd have got initially in here. We'd have added there. We'd have certainly added there at that 58. Was it 58 or 53? And then trailed this up. Consolidation. Next leg up there is we've broken this 137.40 area, so we'd have bought there and then got out here positively. We'd have got out there at 137.44.6 before the 2 minutes was up. If we had the standard account, if we had a news trading account, we'd have either kept it open, which I would have done, or again, but that's, well, I'm saying I would have done. I would have probably closed it because that's the nature of my psychology, okay? Not everybody's the same. News trades might have not, those people with an account that allows you to trade the news would have wanted to do exactly that as the news broke. So whether you actually got long here on this, on as the news broke, whether you got, you might have unfortunately got filled there. And so you're still out the money because of the spike up, but the spread would have widened a tad. But see how tight the spread is right now. So we're moving up. That 61 is still holding, so I'd still be long here. Depends where you got in. But if you got in here on the conclusion of the data and you've rallied up, even if you come back here, you've still got a few pips out of that move. Okay. So there we are. Dollar CAD moving to the upside on this week. Negative decline, 41,000 decline in 1 month. That's quite a significant decline for the Canadian jobs data. Let's see if there's anybody talking around it anyway. Make it. Anyway, so that's our main news of the day. The Canadian jobs numbers. And the unemployment rate is the only caveat that sits there, but it's, as I say, it's still relatively high. CFTC futures positions later on in the day. So while we're here, let's have just a quick look at next week. It's inflation week. China rolls their data out on Saturday. Bowman's speech is becoming more significant now. She was in the frame, potentially in the frame for the new Fed chair. Her name is getting mentioned less and less, but her and Chris Waller, current Fed members, seem to have been overlooked. It seems to be between the two Kevins, Walsh and Hassett. But then last night, while we're on the Fed, President Trump announced, I've forgotten the guy's name now, I could make a note of it. Perhaps I didn't make a note of it. I thought I had. There was so much news flying around yesterday. But as a temporary member of the Fed to replace Cleveland. Can't find it. I wrote the guy's name down. Anyway, the president did mention a temporary person in his own mold to take the vacant chair on the vacant seat on the Fed. Policy Committee. So whether that means he's got he's a potential player for the new chairmanship that becomes available in May when Jay Powell's term comes to an end, is probably quite questionable. It looks like it's between Kevin Walsh and Kevin Hassett. Kevin Hassett's a current economic advisor to the president, smiling Kevin. He's always grinning when he's on the telly or when he's being interviewed. And then Kevin Walsh, still on Wall Street and still very well regarded by the Hawks, and very much in line with Trump's thinking of getting rates down, 1 or 2% very quickly. So we will have a much more compliant Fed with what Trump thinks, whether that's right or wrong. One would argue, the independence is key, and the market won't like that, which is added, I would argue, is added to the weakness of the dollar. Obviously, that's not as we've gone through this week. So if you choose the euro, you can see we went to as our move on earlier in the week to 117. But remember, this time last week we were all the way down to 114. So that's been a massive move this week. Obviously, initial reaction was the Fed. Was the non-farm payroll, but even Monday, Tuesday, Wednesday, and Monday sideways, Tuesday's ticking higher, Wednesday, Thursday we moved higher. A bit of retrace later yesterday, but moved up again today, but not as high as we got to here on yesterday morning. Currently 116.46, so 116.50. You can see is our new, not new, but our continuing pivot area for the euro. So dollar remains very much under pressure. Sorry, we're on the calendar. What about next week? So if we just go to next week. So Michelle Bowman wants a potential candidate, or talked about as a potential candidate, has her mantle has slipped somewhat. Sorry, let me just just bear with me a second. I'll just put in the main filters of the day. Actually, let's just put in the main 3 candle ones, and you'll see again it's as we go into the middle of August, still relatively some significant data to come out next week. Japan closed on Monday. The RBA decision overnight between what's not the overnight my time. If you're in Asia, it's obviously not overnight. It's in your trading day. But RBA expected to follow the Bank of England with a 25% basis cut down to 3.6% from 3.85. The main data of the week, though, as far as the market moving, as far as the President Trump's concerned, as far as the tariff story is concerned, it all relates. It's all obviously hangs together. Is the inflation data out of the US on Tuesday the 12th? That's the main data point for next week. If you're looking at one particular data point next week, this is the one. Core inflation 2.8% expected to tick up. If this is anywhere over 3%, there'll be all sorts of pans being clanged everywhere. That number. If we beat, it doesn't go tick much higher than the what's expected around 2.8, 8.5. If we're down under, if it comes in at 2.7 or 2.6 something, that'll really vindicate the Dubs, and absolutely nail on probably a cut in September for the Fed, and probably firm up another cut by the end of the year as well. But obviously, there's still another data point of this. This is the 12th of August. There's a sort of similar time in September to come as well. So there's 2 of these. There's obviously another non-farm payroll. There's weekly unemployment claims. There's the JOLTS numbers, all before the next Fed meeting. Let's just bring that up with you as well, which is the 17th. So the CPI will come out in that week, and their meeting will start on the 16th. They'll announce on the 17th. But as I say, it's it was 90% yesterday. Interesting. It's 89.2% now. Chance of a 25 basis point cut on the 17th. So that's nailed in. I mean, it's come down a tad. Yeah, it was 92% yesterday. I mean, a month ago it was down at 60%. So the data has moved, so that markets are expecting a move in September now for the interest rates in the United States. So that's key, but it's there's still more data to come. But that will be the main market moving event of next week, Tuesday the 12th, 12:30 GMT, 1:30 my time, wherever you are in the world. Obviously, make your calendar aware of it. Wednesday, relatively quiet. Inflation, I say it's inflation week, so inflation from Germany. Remember, Germany report it through their federal states, so it comes out in a bit of a piecemeal number. Weekly and quarterly GDP, monthly and quarterly GDP from the UK. Moribund. PPI as well on Thursday. So following CPI on Tuesday, PPI out the US is on Thursday. We'll be live for these events. GDP from Japan as well. Friday the 15th is a key holiday in many states, Liberation Day, Assumption Day for many Catholic Christians. Italy will be closed, Greece, Slovakia, all the East European countries will be closed. Ireland will be closed. Independence Day in India as well. I didn't remember that actually. 15th of August, but there we are. Friend's birthday as well. The wind blows in sunny Cyprus on the 15th. And core retail sales and retail sales, headline retail sales out the US also on Friday. So the committee alike, if there's anything like the division we saw in London yesterday, that'd be a bigger surprise. So Aussie in play between now and then Tuesday. Obviously dollar in play because of the inflation data. Sterling still in play, and Euro, German inflation. So everything on the cards. Even though it's August, there's still plenty to get your teeth into, and pips to be made, points to be made. So don't miss out, my friend. So let's have a quick look at where we are as we go into the final session of the week. So the trend continues. So the weakness, so this big move up for the dollar, should we say, the euro moving down into this 114 area from the 117 area. We've recovered a huge amount. High was a tep too far. 116 seems a bit tep so far this week, but what have we given up? We've only given up about 50 pips, and we rotate at 116.50. So that's our pivot area going into the weekend and going into next week. So far, there's that weakness on the hourly chart, but we're still, the higher time frames remain bid again following that 6-day move down. And a big turnaround on Monday, having stomached the big turnaround on Friday, having stomached the surprise that was non-farm payroll, and then we continue to limp higher this week. There we are. There's that 117 test yesterday for euro, similar with the others. So Aussie 65.15 at the moment. So we recovered the key 65 handle here today. Or yesterday, I should say, sorry, and we've held on to it today, although we've come back down. So the week high has put us to 65.40 yesterday, and we're back down. Holding 65 is key. It's a big support area, lots of buys at this level, so relatively well bid as well, although we're down today. Canadian dollar, we just had a look at on the daily time frame. You can see dollar's been weaker since Friday, and it's bounced a bit today on the weakness of the jobs data out of Canada. And there we go. That's the 20-day moving average playing its part. And that big box we were in, that channel sideways box we were in from like mid-June through to the end of July, was in play, and we broke out and we're back into that, or back towards the top of that at the moment. So whether that's still relevant or not, we shall see as the days move forward. But obviously, we move back into this zone, we'd have to break the 50-day moving average at 137 to take us back down to the bottom of the box at 136, 135.80 zone for dollar CAD. Swissy 80 as we speak. still holding on to its gains this week, but less so. Remember, it's been the best performing. It's losing its shine a wee bit. That was Monday. Not I don't know what that. That's. So I think it's start of the week. So less movement in the Swissy today. .81. We haven't been able to. Let's do that. Let's do that on the hourly basis. Might look at it a wee bit better. There's .81. We haven't been able to get to this week. This was earlier in the week. In fact, we did get to it briefly in early trades this week, but we haven't been able to recover it. So sideways action on a Swissy typical August move. Obviously, the Swiss franc being pressured by the 39% tariffs from the United States, and the president of Switzerland went to meet Trump this week and came back empty-handed, more or less. No, did come back empty-handed. Not more or less. She did come back empty-handed. I'll go back empty-handed. Yen 147.85. Dollar up today. But again, a bit range bound this week. Really, there's our top, and we're interested. We're testing it for the second, third, fourth time. 1, 2, 3, fourth time. So it's looking more positive the last time. So that's looking quite interesting to the upside. And again, another one which would have automatically triggered along here at 7 o'clock this morning. Stop loss down here initially, then there. I'm probably around about here now at the moment, just above where we got in. Stop loss at entry, I would say that now, if not even, it might even be there now. Now it's 2, that wick could have broke it, so no, we just stayed. It would it would keep itself there, so we might end up not making any money on that one. But anyway, there's a clear area now. We've tested it once, might be a bit too aggressive. Yeah, it's Friday, so let's see. If that gets taken out, at least we'll have made something on that at 147.56. But yeah, that's dollar up against the weaker yen again this week. Today, in fact, there we are, moving up nicely there. The hourly chart looking quite positive, even though we've got quite a wick there. Kiwi 59.50, another key pivot area as we've rallied to get to 59.70 yesterday. 59.50, the 50-hour moving average holding there. A break back over the 20 at 59.55. Doesn't look like that's happening. So a break of the 50-hour, bring us back down to this little cluster here at 59.30 to the downside. This holds, breaks up here. We test that recent high from the 6th of... that was a long position we had, wasn't it? Oh yeah, that's long. So that's taken the target out yesterday. Or was it this morning? Last night. So that's it, T1. I should update all these open trades I've got on my trading platform. I haven't copied them across to the Discord channel. But anyway, so Kiwi bid against the dollar and sterling we did earlier, didn't we? 134.20 now, so it has breached that, but with a couple of minutes to go, so that could be triggering some dollar buying as the US market is 30 minutes from the cash open. So let's have a look at the indexes. We've had a great some really positive earnings this week. Apple was jumping around all over the place, 5% up on Wednesday, a few percent up yesterday. As I say, Eli Lilly, or as I know it, Lilly, is down 14% yesterday on the fat busting drug getting turned negative. 3.18%. Apple was up yesterday. Intel down 3.14% on the tweet from President saying the CEO should he's got a major conflict of interest and he should resign immediately. He hasn't done that with his influence on his investments in China in particular. On national security matters. How long he's going to last with the pressure from the Trump administration, I don't know. Probably not very much, but anyway, that's a major move on the indexes. But Lilly had a big pull down on the Dow. So the Dow was down half of 1% yesterday. NASDAQ was up 0.35 of 1%. And the most important of all, The S&P 500 closed at 6,340, absolutely flat. We were down about 5 points overall. So, and we've still got live positions on the SPX and the NASDAQ. Let's just go through them. So the Dow at the moment, let's take it up to the hourly. There we are. There's that moved. That was the open yesterday on the Lilly situation, and never recovered yesterday. So 44,030. We went as low as 43,800. So the 44,000 handle is what's in play on the Dow as we go into the final cash session of the week. But again, daily time frame still looks quite resilient, although the caveat is that we haven't been able to break the 20-day moving average this week, and so that rounding top is looking a bit more negative. So the 50-day moving average here for the Dow becomes absolutely imperative. It's survived one test last Friday on the following non-farm payroll, rallied significantly on Monday, but hasn't had chance to move higher. Earnings season, we're over 60% of companies reported now. I don't mind here the Dow have actually still to report. I know there's big retailers still to report, and we're looking at for next week. But so that is all being digested now. So that's coming to an end. So we could slip into a bit of a doldrum by the middle of certainly this time next week. For the final 2 weeks of August, this could get quite quiet. But so watch the 50-day. That's my real key alarm area, alert area, 43,700 on the Dow on our platform here. As we go into next week, that's looking potentially relatively weak, having been able to breach the 20 days. So some short positions might be coming along on Dow components and Dow itself. I know we don't trade the individual stocks, but I do on a different platform. But anyway, let's just do the Americans first. So NASDAQ 100, we were long. Where were we? We were long from the 6th. I can't remember where we were. And we're still in the money. Our stop loss is down here. So when was the 6th? It was here. There we are. That was our entry here on the close. In the money on that still. I haven't really set a target on that. I've put it around the previous high, this intraday high. I'd obviously like to see it. That 23,571 might take some money off the table, but we went to it yesterday and I didn't. So I think my target's here. Or is it here? Anyway, there isn't one. The stop loss is still, was down here. I've pulled it up. I might pull it up again later on. So we're still long. That's still live position. NASDAQ 100 positive, and same with the SPX, although it came down a bit more yesterday, a bit more volatile. Look at that. We closed absolutely, 5 points to the upside, and we're up a tad again today. The 20 here has actually held, and obviously the 50, 6,200 is coming up to meet it. So that's going to become quite a significant support area as well, but could get tested in August as well as a new all-time high getting tested as well. But we've already sort of poked that here at the end of July, so we could do both quite easily in an August trade market, but may do neither, of course. Over here in Europe, the DAX is trading at 24,185. A good strong update yesterday. There's a line. I don't know. I haven't got DAX position up. No, I haven't. Strong day yesterday. We're down a tad today, but that's a significant break on last night's close over the 20-hour moving average, and certainly this native moving average system would have taken that as a long, having got with a triggered short there on Thursday last week. Don't know where the target would have been, but it's been bought back, and that's now closed out relatively flat. But anyway, DAX needs to get back out, creates a new all-time high to break out of this congestion at the top. We thought we were, moving down quite significantly here towards the end of June, but then we bought it back and we were positive for July, and then the shock of payrolls last week added to the move lower we'd been doing last week anyway. Took us under the 50 and the 20 yesterday. This time last week looked really quite negative, but as you can see, it only lasted for a day, and we've been better all week and adding higher to the DAX. The UK 100, there was potential long position here. We were talking about this yesterday, weren't we? The key 9,000 level. We've been over this level now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trading days, and we've even been above the 9,100 level also for 12 trading days, or 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, 12 trading days. So not much to choose between them. And the 20-day moving average sits exactly between them at 9,050. So that's our big support area. I can't remember whether I took a DAX. I don't think I did. I think I only took the Forex ones, didn't I? Can't remember. I've been really out of sync this week with transferring my trading data names across to your platform here. So there we are. That's still long. The indexes across the board in Japan we're at 42,000 as well. This is the daily new all-time highs getting poked for the Japanese currencies. The yen weakened, so that was another trigger that went long the Hong Kong market as well to the upside. And let's just finish with the crypto, gold, and oil. So crypto, Bitcoin, 16,500 this week. Remember, in 2017, 7 years ago, we broke $3,000 for the first time. Next week, we went through $4,000 for the first time. This time in 2017, it's a stellar year for crypto. But here we are, 116,500. Who would have thought that? But again, nice support here on the 50-day moving average. We said earlier this week and last week, the move down again has been bought back. So the believers are very much moving. And the key thing from yesterday was we broke back over the 20-day moving average with quite a strong candle. So that's positive. Is it going to be more positive than this negative move, which petered out after 2 days? We shall see next week, obviously, or over the weekend as well. Obviously, we got trading on Saturday and Sunday, but watch those volumes. But next really upside target is that 119,000, the 120,000 level, and then the all-time high at 123,000. So this is looking still relatively positive. We still got a negative. We talked about this, didn't we, last week before last or something, about the divergence in these two indicators compared to the flatness of the price action. But and then we did pay out, so we got that nice move lower into the 50-day moving average. And now this looks like some action on the turn. The RSI seems to have turned with the bounce off the 50-day moving average as well. So looking quite positive. Bitcoin, Ethereum we talked about yesterday as well. Energy, and I'll leave you with gold. So US oil 64.34. This was another short this week, and that's played out as well. The gap here on the 4th from the big move down on Friday, the rejection of 71 and that key 70 level, and short here on Monday, and continue to move down. And again, another one that's poked out of its box yesterday. That's the main story of oil I want to talk to you about. Under 65, and we're trading at 64.30. So the trend is lower. Where's the next support area? If we look left, the next support area is through there at 61.50. 61.50. So 62, another first, and then 61.50. The low of that little move took us to 60.50. So dollar movements to the downside for oil. If that move lower doesn't play out, we need to break back over the $67 level where the 20-day is now moving. But you see the negativity of the move has been exacerbated by the cross of the 20 from above to below the 50 yesterday. But we were already short from this from Monday on the 4th, following the big move down on the Friday. And finally, gold for the week for you, 3,390. So we're still having to go at 3,400. And we are moving higher. There's Friday's move, and again another edged higher, and a good day so far for August, a good day yesterday, a relatively positive day yesterday, and the 20-day is flat as flat there. So 3,300 is the key support area. The 50 and the 20 run through 3,350, as we've said many times this week, and we are currently trading at 3,392, so to the upside, and having a good day yesterday. Put the hourly time frame on. Positive day yesterday. That was last week. Positive day yesterday with new highs this week. New higher lows as we're trending higher, and the hourly bouncing off the 50-hour, this morning, and ticking higher. So you'd like to see that closing above the 3,400 level, but that's let's put that in as a horizontal line. 3,400 is obviously the line in the sand. Make it just one, and the setting is 3,400. Let's play it up. I don't want to do that. I started doing this yesterday. I couldn't change the numbers, but 3,400. Obviously a target for many. Well, where did it go? Oh, at the end. Oh, that's why. 3,400, you fool. And there we are, providing key resistance. But again, it'd be key target areas for many. Done, sold, there at 11 o'clock. Another spike here at 1 o'clock. It's congesting 3,400. Many would have had that as a target this week and taken money off the table, given it's Friday. So there we go. Thank you for watching, my friends. Remember, there's lots of opportunity all the time. If you're not with us, why not? We're as good, if not better than the probably 1,000 prop trades that are out there now. We are grown-ups. We've got static drawdown. You can get 90% payouts if you take a pro account. Minimum 3 trading days, but lots and lots of payouts. Friday is payout day. I was speaking to Alex this morning from Kenya. Love Kenya. Great people, great country, great coffee, fantastic wildlife, and great place to do business. Well, so I was speaking to Alex this morning. And others, not everybody wants their certificates put up here, wants to be public, but some good traders with us. And it's very simple. You either take a 2-step or one-step challenge. I don't want that one. And the evaluation phase, I say, is either 2-step or 1-step to get you to a funded account. Remains our most popular is the 2-step challenge, and the $25,000 account is the one that people are still paying to join the most. Obviously, you can start with $5,000. That starts at $55. If you're new, as it says on the video, new 25 gets you a 25% discount off all our prices. So for just over $40, you get $5,000 worth of equity. I'd find a bit more, my friends, if you could. 50,000 really hefty. $260 gets you a very hefty equity account. Half of that is our most popular, $130 for a first timer. Gets you that big $25,000 account. 8% and 5% on step 1 and step 2 is what the target you should be aiming for. You don't want to be losing more than 10% overall on both steps. 5% is a daily loss, and then you get to the funded stage. You get your money back after your second funded payout, and 80% of any profit you make gets to you on the Friday after you've got your funded account. Can take up to 3 business days to get your account authorized. Mostly it's quicker than that, but it does say 3 business days. And then you trading. If you're trading the policy, the steps and the strategies that worked for you in phase 1 and phase 2, there's absolutely no reason they shouldn't work in the funded account stage. Absolutely no reason whatsoever. and then you got real money. It's a really simple way of making real funds from a successful trading career. So, and then, I mean, the beauty of this setup really is, guys, you just keep scaling and adding accounts and scaling and scaling. You get some significant payouts on your accounts. The 200,000 account, guys. It's obviously a lot to get going. It's $1,000, $750 to get you 200,000, but that's a massive account. The rules are still the same, though. See, so it doesn't matter whether you're a $5,000 account or costing you $40, or a $200,000 or $100,000 account. The targets are the same with the two-step challenge. If you wanted a pro account and you wanted to trade the news, you've heard my comments on that. Trade news is allowed. The benefits of the pro account, obviously, the targets are a bit tighter. It costs more. But you got 90% of the profits you make, not just 80%. So there's an extra incentive there as well. So anyway, have a great weekend, everyone. I'll see you Monday. I'm not quite sure what I'm doing on Monday. I think I should be doing a webinar on something. If there's a topic you'd like me to talk about on the webinars, do let me know, and I'll obviously put that in. But nobody's sent any comments to me today. So I will leave you for Friday. Take care. The Canadian jobs were pretty miserable. The Canadian dollar's come under pressure. Gold continues to have a go at 3,400, currently 3,392, and holding up on its 50-hour and 20-hour moving average there on that chart. So take care, everyone. See you on Monday. Be good. Have a